For more on Tesla, let's bring in our Fast Money friend, Gene Munster, managing partner at Deepwater Asset Management. Gene, great to have you with us. We've been having a robust debate here on the desk about Tesla. Where do you think we are in the Tesla story right here, right now?
So right here, right now, we are challenged. The company's margins are going down a little bit more than what investors had hoped. That critical metric was EV gross margins ex EV tax credits. That came in at 19%. It could have been 20% based on some accounting of some advanced credits for manufacturing. We'll have to wait for the call, but that's an important distinction how people are going to view this quarter. If it could be a 20% number, investors will feel good. If it's 19, they don't feel good. So to answer your question, near term, they are feeling the pressure here, and it is impacting their business. And I want to jump back to an important point that Dan made about the cult piece of this story. And I think that is the reason why cult followings happen on growth companies is because a group of investors believe in where a company is going. So it's beyond the current quarter, to your point, Melissa. And I think that's really the hinge factor and going to be the X factor here in terms of how this plays out. If, in fact, they can proceed on their growth, we can talk about what that growth strategy is. I think that the stock moves higher, and I think that's ultimately, it's going to drive, I think, some of the Tesla bears mad here over the next couple of years, because there will always be this carrot out here because they're getting into some massive markets, always this carrot out there that Tesla is going to be able to turn the corner and really hit some new growth vectors.
So Gene, again, a $570 billion market cap company that's down from $1.2 trillion at the end of 2021 here. And again, you just heard us kind of talking about this. I mean, there is clearly a change in the fundamentals in what's going on with the company. Even when the stock was careening lower in 2022, they weren't cutting prices there. And they sounded pretty confident about their ability to manage supply chains coming out of this uncertain period. They're still calling it an uncertain period. And we haven't even had the, the recession that we're all expecting. So I guess my question to you is, you've covered high growth, high valuation, tech companies in the past here. What's different about this one? Because as long as I've been in the business, every single time there's been a special story like this with a special guy like Elon, it's always come undone. And I'm just not certain down 55% really means that that's it, that it's come undone and that's it. And we can get back to, just like not caring about valuation and let it start working again.
Well, I'm not certain how this ultimately plays out, but one of the reasons why I think what's most important here is just the trajectory of margins and growth. And you're absolutely right, is the fundamentals have not looked good. This has been a downward trajectory, especially on margins. But to answer your question, what could reverse this ultimately is that I still believe, and this is going to be one point that's going to be hard to probably shake me from. I want to be a level-headed in all this, but I still think traditional auto is in a tough spot. Ford's their E division's losing $35,000 on a car. They're just ramping up on there. Tesla's making $10,000 per vehicle. So to answer your question is, if they can continue to do what they're doing, being profitable at going after what I see as some large addressable markets around energy and transportation, storage, I think that the story can turn around. And so the Elon factor, agree. He's a wild card, but I think the markets that they're going after are so big that this company can continue to move higher.